started. My name is Lauren Winsler. I'm the branch manager for Frost Mortgage Lending Group in Santa Rosa. Thanks for joining us today. We're going to do a quick primer on the FHA Choice product. Let's get to it. This is a special financing product for FHA with credit scores between 500 and 639. A lot of sentiment in the realtor community is like this, that lenders aren't lending anymore, and the credit standards are too tight. And of course, this little cartoon sums it up. A lot of times your clients are faced with the prospects of just not qualifying for a loan given where things are in the last couple of years. And this product is an attempt by our company to remedy that and address that for deserving would-be homeowners to get into a house. So what are we going to cover in the next 20-30 minutes? We're going to talk a little bit about the background of why this program exists. We'll talk a little bit about rescoring credit. We'll introduce the FHA Choice product and give you an overview of the guidelines. And we'll talk a little bit about how you can use this in your business. Little paperwork. First thing, the recording for this presentation will be available on WebEx or on our website, or both. And a little disclosure licensing keeping there. Type any questions in the chat log as we go, and I may be able to get on there and see them as we go, or we'll look at them at the end of the presentation at Q&A. So bear with me if I don't immediately jump to the questions. So back in the summertime, HUD announced that they would be putting a minimum FICO score on FHA loans. Previously, HUD was not a FICO-driven loan. It did not have a minimum credit score, and lenders could approve loans without a credit score in the file. As of this summer, when they announced the intention to do that and then implemented it, all the lenders do require a FICO score to do loans. It's a little more difficult to do non-traditional credit given this, but we can talk about how to deal with a homeowner or respective homeowner that doesn't have a FICO score yet when we talk about rescoring and getting them set up to report a FICO score. So they officially mandated that in September of 2010 and took the essentially, if you got a 500 FICO, the maximum loan to value you can do is 90%, and at 580 you're eligible for maximum financing at 3.5% down. The first mover was a well-known lender who immediately rolled out an increase from 620 to 640 for all new purchase loans starting October of 2010. And the rest of the industry soon followed with probably the largest FHA lender in the nation in November rolling up to 640 as well. And some of them actually raised rates or provided what they call lender price adjustments when you're at 640 to 660 to make the loans more expensive to do at a higher interest rate. But at Frost Mortgage and Primary, we have this opinion that that there's more to FICO scoring, more to a loan than a FICO score. We think the industry is relying a little bit too much on one number, and we think you're more than a FICO score. So we do have a product here that we're talking about that goes below 640. But what does that really impact? You're starting to say, well, what does it really mean to me? Well, Bloomberg is estimating that 6.3 million borrowers are left in that 620 to 640 range, according to a report back in November of last year. And that equates to just under 4% of all consumers are in that little gap. There's actually statistics about 14% or greater, 14-15% of consumers actually are at about 620 or below. So when you round all the numbers together, at least 20% of our prospective market is under 640 in credit score. hard to get data on credit scoring because Fair Isaac doesn't release a lot of information as far as average and statistics and so on. So you get somebody that's trying to buy a house and they can't get pre-approved because they've got too low a credit score. What's step one? Step one is to take a look at credit rescoring. It's a simple fact of the matter. According to a 2004 credit report, audit, if you will, a report by the U.S. Public Interest Group, a lobby group in Washington, D.C., found in a survey that 79% of credit reports contain errors. So it's possible to take a look at a client's credit report and fix an error and immediately raise their credit score. They found in that study from '04 that 25% of the time the actual error resulted in a lower score that gave them worse terms or denial of credit. So credit rescore takes as little as 48 hours, and it's something that we can simulate their credit score if we made that change. So the goal is to say, okay, you're 635, even 620. You can get, 20, 30, 40, even 80 points I've seen jumps by making corrections to someone's FICO score through a rescore. And if you're listening to this and this sounds all like, what are you talking about? You have to envision this. The credit score, there is no credit score attached to your or borrower's or would-be homeowner's file. There is no score that's pre-calculated, and that's what their credit score is. The credit score is calculated in real time every time a credit report is looked up. So all they do is look at the in-file credit report and feed all the statistics, all that reporting through the algorithm to produce that 3-digit score that we rely on so much. So if we can correct the report, immediately when we repull the credit score, it's going to report a higher number or lower number if the case would be. So that's something that we would look at first and foremost. If there's just no room to wiggle and the only thing that's going to raise the credit score is time and good credit repayment history or new accounts with good repayment history, then we can look at Plan B, which is the FHA Choice product. And FHA Choice provides a sub-640 loan product. It is an attractive 30-year fixed rate interest rates. It's an FHA loan insured by the federal government and HUD. And it's what we believe as a company is a dramatically underserved market. Other loan indicators that we've done and statistics that we've done indicates that loan performance can meet or exceed the 640 plus loans if we look at those things. And the guidelines will spell out what those are. But our company has done a lot of forensic analysis on defaulted loans to determine what really matters when we do a Make Sense loan. And these loans are loans that we service as a Ginnie Mae seller servicer, or securitizing these mortgages and servicing them as Frost Mortgages, primary residential. And as of April, we were set up in 37 states, of course, including California was one of the first. And that number's grown since then. So to get an FHA Choice loan, we need to have a 3.5% down payment of their own funds if they're at 580 or above, and if they're below 580, we need a 10% down payment. We need reserves, which is not required by standard FHA, at least 2 months of their PITI, principal, interest, taxes, and insurance payment. And if they're actually using a retirement account to create their down payment, such as borrowing against a 401k or withdrawing, paying taxes or whatnot, to use that for down payment or using retirement as reserves, we need 6 months. So 2 months reserves, 6 months if we're using retirement for the reserves, rather. Employment, we need a minimum of 12 months in the same line of work for the borrower, and a minimum of 6 months for the co-borrower. So we're looking at income stability in that particular trade or occupation. This is for a W-2 borrower. And self-employed borrowers, they look at it a little bit differently. They want a longer work history as well. They're going to verify through canceled checks, bank statements, and a verification of rents, rather, their rental history for the past 12 months. so they're not going to want to see any late payments on their existing rent. And they do not allow non-occupant co-borrowers on this loan. So, let me rephrase that. Non-occupant co-borrowers are allowed, so you can have a family member co-sign. So, excuse me. So, a comparison here of some loans. You might have a mid-credit score of 640, 3 months on the job, gift money from family, and you might have no money in the bank beyond their paycheck. It comes in, it goes out. No idea if they have health insurance, and a debt to income of 33 that is upwards of 51%. And what we call an FHA lending compensating factor is none or who cares, right? One appraisal. That loan would be approved under the current guidelines, or could be approved. A mid-credit score of 615 with 4 years on the job, money in the bank, over 3 months of reserves, health insurance verified for them and their family, debt to income of 29 to 41, compensating factor, part-time job maybe that can't be used, but it's additional income. And we've done an appraisal, an automated valuation model, as well as a field review to adjust that appraisal. That loan in the current market would be denied without FHA Choice. And this is the type of scenario that we like to look at. So what type of house is eligible for this type of financing? Single-family residence, planned urban developments, PUDs, FHA-approved condos only, and what we call non-rural. It's not designed for acreage-type properties. It is owner-occupied only, as is FHA. What's not allowed is any kind of subordinate financing, down payment assistance, no seconds whatsoever. It is a refinance-eligible product, not just purchase. You can't do cash-out refinances to 85%, and we cannot do a streamline refinance with no appraisal with FHA Choice. How do we handle the major derogatories? Well, I've got somebody that's got that low credit score because they had a bankruptcy or foreclosure. We're going to be following FHA guidelines. 2 years on BK, 3 years on foreclosure. And but let's look. Those guidelines change not frequently, but it's something that they follow what is in the HUD handbook. Unpaid collections over over 5,000. You can have collections up to a certain amount at 580 and above, 620 and above, and then there's guidelines that want unpaid collections taken care of when you're at 580 and below. So if you're under 580, we might revisit rescoring again and see if we can't get you from 620 to 580, from 560 to 580, 570 to 580, and so forth. So in other words, there's a step in there where if we can qualify with FHA Choice at 3.5% down by getting their credit score to 580 plus, that's another tool that we use in this arsenal. So in summary, for customers that need a Plan B, that have solid employment, that have down payment and reserves, but unfortunately don't have that perfect credit, but have a good explanation, right? This is a loan that you ought to talk to your would-be home buyer about as an alternative to not buying. It's as simple as that. So it's a solution to allow you to sell more homes. Contact us as well. I can be reached directly at Lauren_Winsler at Frost North Bay, on Twitter at Frost North Bay, and be sure and download the recording and PDF at the conclusion. If you're not on our email list, subscribe at webinars.frost.com.